Hello, welcome back to my channel. If you are new here, my name is Layla, and for today's video, we're going to be going over another subscriber's financial situation. Okay, per usual, I have 3 quick housekeeping items to run through. So the first thing, if you are interested in submitting your financial situation to me for me to make one of these videos, it will be anonymous. You can email me your current situation, ideally focused around debt and that sort of thing. I do have a list of things in my description box that I would need details on, as well as my email. So feel free to reach out to me and I can make one of these videos. Number 2, if you're interested in taking things a little bit further and working with me one-on-one, I do also offer one-on-one sessions. That link is also down in the description box. And then third and final thing is to please be friendly in the comments, because the person that this video is about will likely watch this video, will likely read the comments. So please keep everything helpful and friendly. All right, so I'm gonna go ahead and read this to y'all. I did receive some feedback that I am too talkative while reading through it, so I'm just gonna read through it. I don't know, y'all let me know. I feel like for me it worked better to as I read through things, provide some feedback, but I get it. I'll read through the whole thing first and then come back to the things that stood out to me. So here we go. I'm currently 20 years old and live in Baltimore, Maryland. I live at home with my parents, so most of my daily living expenses, housing, utilities, food, phone, etc. are covered. I recently graduated college with my bachelor's degree in accounting and a minor in finance. She put 7/11/2023, so that's my birthday, but I'm assuming that's when she graduated. I was fortunate enough to have most of my schooling covered by either scholarships or my parents. However, when it was announced that student loans may be forgiven, my parents thought it would be a good idea to take out a student loan with the slight chance that it may be forgiven in the future. So I do have a student loan of $5,950, but there is a possibility that my parents will pay it off once it is due. I believe that will be in about 6 months, February 2024, as there is time from when I graduate until it begins accruing interest. I currently work 30 hours a week at a small local accounting firm, which I really enjoy. I currently don't have any benefits from my job, but I work with friends and it is in close proximity to my house, so I don't have any plans to leave anytime soon. My employer is trying to work out a 401k plan, so there is a possibility I may be able to contribute to that sometime in the near future. My take-home pay is $1,993.78 after deductions each month. The only fixed expenses I have each month are related to my car. I have a $22,177.99 car loan with a 2.64% interest rate with a minimum payment of $519.81 each month. I pay $1,616.49 to my parents for my car insurance every 6 months. That's $269.42 per month. I know this is high, but I'm on my family's plan and we're 4 drivers for 3 cars, and this is what my car amount comes out to, and about $40 a month on gas. My variable expenses fluctuate each month. However, I do like to spend money on myself, and I will put up the list of expenses that she listed here. Total expenses, about $1,200, $1,300. I like to open credit cards to build my credit and also earn points/cash back. However, I am very diligent in paying off my balance in full each month. I recently opened the Sapphire Prefer card when they had the 80K bonus points after spending $4K in 3 months. Together with my parents, I decided to put my tuition for the last semester of college and a CPA review course on the card to meet that minimum spend. Since I owed my parents the car insurance for the last 6 months of 2023, I deducted from what my parents put on my credit card. My parents are paying me back for that and still owe me about $1,300, which will be paid back by the end of August. However, since I don't like to carry a balance on my card, I took out money from my savings in order to pay the large balance. I do have a Roth IRA, brokerage, and multiple savings accounts with Marcus by Goldman Sachs. The current balances as of July 14th are listed below, and I will put that up on the screen. Personally, I would prefer to prioritize investing and saving my money to paying down my debt quicker. First of all, thank you so much for submitting all of this information. Second of all, you are 20 years old and you have all this awareness about finances, and that makes me so happy and excited for you, because at 20 years old, you have so much potential when it comes to your finances. I love that you don't have student loan debt. That's amazing that your parents were able to help you out with that, as well as scholarships. That is incredible and the ideal situation to be in. It's not an awful idea that your parents ended up taking out a loan, because the student loan debt is not going to be canceled. It's not going to be forgiven. But instead of them paying that $6,000 up front, they were able to, probably save some money and keep it, gaining interest or investing it. And then they'll be able to pay it off by the time the interest does start accruing, which you did say will be about February 2024. Because keep in mind, so yes, the student loan debt interest pause and having to make payments, that does end in August, September of this year. But because she just graduated, she has 6 months after graduation where no interest is accruing on that. You also got a job right out of college, which is great. You probably had this from while you were in college, and then it looks like maybe you got to increase your hours or something like that. I think it's definitely a good start. I don't love that they don't have benefits or anything, but since you are 20 years old, you can be on your parents' insurance plan, so that works out for now. The other thing you mentioned is that the employer is trying to get a 401k plan, so that would be ideal. Of course, whenever that comes around, my suggestion there is to contribute up to the match, but we'll talk about that a little bit more. Your income is a little bit lower, but you're fresh out of college. Me saying that is very subjective. I understand that. So yeah, your income's a little bit lower, but I would expect for you to go into a different career within the next couple of years or the next few years and make a lot more than that, especially, once you gain experience and all of that. It looks like your gross income for the year is $25,000 to $27,000 or so, which is pretty good for a 20-year-old. You have your car, that's your only debt. I'm not going to count your student loan here because I think your parents are going to pay that, and plus it's $6,000. But I'm not going to count that. I think you only have your car loan. The interest rate is great. Love that. It's under 3%. So you are a rare situation compared to what we've seen on all of these other videos. Your monthly payment is quite high though, $519. However, you did mention that you want to prioritize investing and saving money over paying off your debt, and I completely understand that. So that's what we're going to focus on. Based off of those numbers, it looks like it'll take you a little bit less than 4 years to pay off your car. Even if you don't make any extra payments, if you just pay the minimum, the interest rate is pretty low and the monthly payment is high, so you should be done with your car in less than 4 years. The car insurance is very high, but you did explain that, so I think that's fine. Within a few years, within the next couple of years, you should be able to slowly see that decrease, and then once you go on your own, once you're 25, 26, hopefully you can get that to under $100 per month or so. When it comes to your expenses that you listed out here, nothing sticks out as problematic to me. You have that Chase Sapphire Preferred card, which I think some people may see a problem with that, but that's one of the cards I actually want to get, and I'm hoping that they'll go back. There was a couple of years ago that they had a $100,000 sign-up bonus. 100,000, wow, I wish it was $100,000. 100,000 bonus points to sign up for that card. So I'm hoping they'll do that again soon. But yeah, I think that one is worth the $99 annual fee. So you broke it down as $825 per month. We're going to come back to the expenses so we can see the difference between your income and expenses, but let's see what else. Your parents still owe you about $1,355, and you said you took that out of your savings. So basically I added that amount back onto your emergency fund, and it looks like you have about $1,400 or so, $1,360 in your emergency fund once they do pay you back. Otherwise, it looks like you have quite a few things that you want to save for or have tried to save for, and we will talk about that. So let's get into what I suggest for you. Okay, for her income, she said that she takes home $1,993.78. I listed out all of her expenses. She did give us a total, but I went ahead and put them all together on a sheet. And if you add everything up, as she shared, her expenses come to $1,267.77. Of course, give or take, but we're going to work with this number since it's probably fairly accurate. If we take the difference between her income and her expenses, she is left with about $726 extra per month. And she can put that to her debt or put it to investing or in savings. So that's what we're going to look at. As I touched on before, if she pays her minimum payment on her car until it's paid off, that's going to take her a little bit less than 4 years. Which I think is fine. She said she wants to prioritize investing and saving over paying off debt. So assuming she does not want to make any extra car payments, then so be it. Over the 4 years, it's going to cost her a couple $1,000s in interest. Nothing crazy. Her interest rate is pretty low, so I don't think that's a problem. The main thing is that her minimum payment is very high. Over $500 is a lot of money. I think that works right now for your current situation since you're living at home and you just recently graduated. But I think with time, like if you were to move out and let's say you kept your same job but you were to move out, that would be pretty difficult for you to manage, especially considering you have a $500 plus car payment. But if you think your life's going to stay about the same for 4 years, then that's fine. So yeah, there's definitely that opportunity cost with that $500. The sooner you pay it off, the sooner you can start investing more. But I think you would be fine to prioritize investing and just pay that minimum payment. I did plug in some numbers to see how much faster you could pay it off if you put extra cash to it. So if you put an extra $50 to your car per month, you would pay it off 4 months faster. So nothing crazy, but it could help out a little bit. If you put an extra $100 to your car per month, you would pay it off 7 months faster. And then if you were to put an extra $200 to your car each month, you would pay it off a little bit, like a year and 1 month faster, which isn't too bad. I really love being car debt free. I've talked about this before, but it has been like one of the most exciting things for me. And even still to this day, I am just so very grateful to have my car paid off. But, you know, I didn't pay mine off until I was, like 27, 28. So you being 20, that's fine. Obviously, just take good care of it, get the maintenance that you need to, and I think you should be okay. But something to consider if you want to. That is an option for you to put extra to your debt, of course. Now, what I'm going to recommend to you is your Roth IRA. Your company doesn't have the 401k, so if they do start offering that, definitely contribute up to the match. But then I think you should prioritize maxing out your Roth IRA every single year that you can. At 20 years old, something that has stuck in my head because I've listened to the Money Guy podcast so many times is that $1 for a 20-year-old is actually worth about $88 at the age of 65.
When we think about investing in our 20s, one of the big things we want you to focus on, that we want you to know, is we want you to understand just how powerful your dollars can be. Brian, here at the Money Guy Show, we have this idea that we call 88 times over as a means and a mechanism to show you just how powerful your dollars can be.
So if you invest $1 right now, that turns into $88. So you can imagine, obviously that's like give or take. It depends on the market. It depends on a lot of things. But because you are so young, your invested dollars are going to go so much further than investing at the age of 30 or at the age of 40. Obviously, you want to continue investing at those age, but your dollar at 20 is much more valuable than a dollar at 40 years old. And I can link to a podcast / video where they talk about this. It's like financial planning for 20-year-olds. They actually have videos on that for every decade, and it's really, really helpful. But that's always stood out to me. They say it in almost every single episode that $1 is worth 88 for 20-year-olds. So I'm going to suggest you max out your Roth IRA every single year, starting now. It's looking like about $500 per month. You do have from January of the year to April of the following year to max it out. So you have 16 months actually to do that. But since your income is lower, you don't need to worry about any limits or anything like that. So you could max it out as quickly as you can. So if you wanted to put more than 500 and you're able to put more than 500 per month, then feel free to do that. But I think that would be your first step. Obviously, things are going to change as you advance in your career. If you get a job that's higher paying and has different benefits and that sort of thing, then you would definitely want to reevaluate your situation. But since you plan on staying at this job, it sounds like for quite some time, or at least the next couple of years, definitely start with the 401k match if it's there, and then maxing out your Roth IRA every single year. After that, I would, like if I was working with you one-on-one, what I would ask you is, what is your top priority savings goal? Like, what is the most important thing for you to save for at this point in your life? I've actually worked with a couple of clients who are in similar situations to this, where they are very young, they are living with their parents, they're in a situation where they don't have too many responsibilities, don't have to pay for too many things. And they may not be making too much money yet, but they are able to save so much money and do a lot with their money because of their living situation. So it's a little bit tricky for me to just answer directly what you should save for, because it definitely depends on what it is that you're looking to do. So I think it's important to give some thought to that and what your top priorities would be. So many people at the age of 20, like when you're fresh out of college and stuff, you may want to start looking to move out, which of course you don't have to. There are many people who stay at home for much longer, and that's a great thing if you are comfortable with doing that and you have a good relationship with your family and your parents. Then that's great. You could save a lot of money. But if that is a goal of yours, that's probably where you want to put the extra $200 or so. So the $500 to your Roth IRA at least each month, but then you have like an extra $200 to work with. You probably want to prioritize that and start saving to move out. Does this look like moving out into an apartment? Does this look like buying a house? Do you need to save for a down payment? Or maybe you can just save for an apartment, first month's rent, as well as a deposit, and even just saving a bunch of cash to get like new furniture and pay for rent, that sort of thing. So you can really save up a ton within the time that you're living with your parents. Maybe you're interested in traveling, so you want to put the $200 toward that. Maybe you want to split things. You are interested in spreading it out between all of your sinking funds, but I think it's important to get down to the bottom of that, and you can either put that full $200 to one thing or spread it out amongst all of your savings goals. And honestly, I think that's really all I would have to say about this situation, because it kind of covers everything. It sounds like you really enjoy your job currently, which is great, but since you have your degree and you probably can advance after some time with experience and just having that degree, it would be best to look for something that offers you a higher pay, and also with benefits, a 401k match, really good health insurance, that sort of thing. And I would suggest working toward that at your own pace. Of course, no rush to have to do that, but that is something to look into, because then that opens you up to much more possibilities. So you could obviously start putting more to your 401k. You can max out your Roth IRA, maybe start putting money to your brokerage or some other form of investment. And then you could also work toward your savings goals and maybe even put a little bit extra to your debt. But I think you are okay to not focus on paying down your car. I wouldn't stress about that too much because the interest rate is low, unless being debt-free is really, really important to you. But I know you said it's not really at this time. And then yeah, keep maxing out that Roth IRA every single year. It sounds like you have a pretty good idea and understanding of finances and what it is that you want out of life. But keep that up. You have a degree in accounting and finance, so you probably have a lot of information, but just keep on learning, not just about accounting and stuff, but personal finance as well. Listen to those podcasts, read the books, read the articles. It's being 20 years old is incredible. If you have this knowledge at 20 years old, you are going to go far. And I'm so excited for you. I am very eager to hear an update in the next year, in the next few years, because I'm going to guess that she's going to be very, very far in the next decade. Amazing job to this person. Thank you again to submitting all of this information. Y'all comment down below if you're thinking anything different or if there's anything that I may have left out. But otherwise, thank you so much for watching. Please give this video a thumbs up and subscribe if you haven't already. It really supports my channel, and I'll see you in my next one.